start with that, right? So originally the swing high, swing low was here. That swing high, swing low has got a lot of quality about it for two reasons. The first reason was the buyer that came in here, and then the very, very fast aggressive sell that came in at that 50 line. That looks like the actual structure that's being used, because when we get a buyer coming in off the 50 and then an aggressive seller, that's something that's very, very valuable to me as a structure. This gives us an idea that this is the sell line here. That's the sell we took based on the peak demand. We took that sell trade there based on the peak demand, didn't we? So we had that sell, and we had this sell up here. That was also the other peak demand trade there. So we've now got the structure, haven't we? We've now got some ideas about structure. We've now got a target price, one target price so far. And that target price is this area here, isn't it? This area here. We're not a million miles away. In fact, if you take it up into the pink zone, we've touched into that pink zone as an exit. Why would that be useful? Because you can see if we go to the left-hand side, you'll see that there was actually quite a big pivot price right at that price level as well, which gave us some sort of reference. So there would have been a nice place to start booking some profits. Now, in terms of shorter-term targets, what else have we got? We've got a bracket here, haven't we? We've got a high-low bracket that we didn't use because we were using, initially, we were using this structure here. We were using that pivot price there, but that pivot price got merged into noise in here. So what did that cause? That caused us to really have a low price here and a high price here. And based on that structure, we've got a second target price, a bracket structure. So based on that structure, we've got a second target price. Is it not interesting that the second target price is exactly the same as the first target price? The second target price based on that bracket is exactly the same as the first target price, not based on that bracket. So in other words, anybody that sold this bracket because it was a bracket will take profits here. And anybody that sold this high phase, this accumulation high from this period here, anybody that sold that accumulation high, they would also be taking profits into that area there. Now, if we get a breakdown from this, now that would mean that there's going to be a possible sell impulse off of that trade there, but we would like to run the obvious trade out of town, so the sell for me would be up here. If that trade starts to make sense and we start to rotate back out, of course what's going to happen is we've now got a big target price. We've now got a macro target price based on that structure, haven't we? You can see the 50 line still has a relative quality about it from here. And from that, we now have a new target price for the sell-off, and that becomes the new target price for the sell-off. It's not that far further down to the downside, but it is still to the downside. We can start to recognize those little targets. We can start to see the areas. We can see the confluences. Everything stacks up. Now, obviously, in terms of this swing trade here, you might be saying, why did we have our sell trade here? Because if I've got a sell trade here and a bottom pivot price here, then, of course, based on that pivot price, where is the halfback trade? Right there, right? The halfback trade is this area here. So I know that that's going to be a sell, which has a confluence with these halfback trades here. So it's got a kind of confluence area of selling process that comes in during that. So we can use that to lean against as a seller. If it gets up into that price and the value is good, we can use that to lean against and try and take the market sell side again if the sentiment stays bearish. And we check off all the boxes, don't we? We check off all the boxes to try and figure out what we are going to do in this location. And that's all it is checking off the boxes to come up with the probabilities. If I can check off one box, I might get a 50% probability. If I can check off three boxes, I might be able to get a 75, 80, 90% probability. I can start building a probability around this area. If I want to sell it, if I get no probability, I don't take it.